Welcome back to our channel, where we bring you the latest updates from the global financial markets. Today, we're going to dive into the month of August 2024, a month that saw significant movements across major stock indices, driven by various global economic factors. Global stock market indices on a screen: S&P 500, FTSE 100, Nikkei 225, and MSCI World Index. August 2024 saw a mix of highs and lows across the global share markets. Inflation concerns, interest rate hikes, and geopolitical tensions affected investors' sentiment across regions. Let's begin with an overall look at some of the major indices and their performance throughout the month. The S&P 500 in the US experienced fluctuations, closing down by around 1.5% by the end of August. The FTSE 100 in the UK, driven by the economic impact of ongoing interest rate changes, closed with a modest gain of 0.7%. The Nikkei 225 in Japan saw a decline of 2.3%, affected by weakening demand in key sectors. The MSCI World Index, which tracks performance across developed markets, ended the month down by about 1.2%, reflecting broad concerns about global growth. S&P 500 index line graph, specific stocks like Apple, Tesla, and Microsoft. Starting with the US market, the S&P 500 struggled throughout August due to mixed earnings reports and rising yields on US Treasury bonds. Despite these challenges, tech stocks remained resilient. Apple AAPL saw a slight dip of around 2%, impacted by concerns over iPhone sales growth. Tesla TSLA had a volatile month, but closed up by 3%, boosted by optimism around its upcoming AI Day event. Microsoft MSFT remained steady, with a 1% increase bolstered by strong cloud service performance. The energy sector was a key player this month. While oil prices surged, stocks like ExxonMobil XOM rose by 5%, capitalizing on increasing global demand. FTSE 100 and DAX graphs, energy stocks, and European Central Bank ECB building. In Europe, the markets were also a mixed bag. The FTSE 100 in London showed resilience, mainly supported by gains in energy and healthcare stocks, such as BP and AstraZeneca. Meanwhile, in Germany, the DAX index struggled, down by 2.5% due to economic slowdowns and weaker industrial output. BP was up by 4%, driven by rising oil prices. AstraZeneca AZ gained 2%, benefiting from strong demand for its oncology treatments. On the other hand, Volkswagen VW dipped by 3%, as production issues and lower-than-expected sales hit the company. The European Central Bank's ECB stance on inflation and interest rate hikes continued to create uncertainty, leading to cautious investor sentiment. Nikkei 225, Hang Seng Index, Chinese Yuan, Asian tech stocks. Turning to Asia, markets faced downward pressure throughout August. The Nikkei 225 in Japan dropped by 2.3%, largely affected by sluggish demand in the electronics and automotive sectors. Over in China, the Hang Seng Index fell by 3% as the country's ongoing property crisis continued to weigh heavily on market confidence. Toyota 7203 T saw a 1.5% decline as weak sales in the US and Europe hit its overall revenue. Chinese tech giants like Tencent TCEHY and Alibaba also faced challenges, with both stocks falling around 4% due to regulatory pressures and slower economic growth in China. The Chinese yuan continued to weaken against the dollar, adding to the strain on the region's markets. BRICS countries: Brazil's Bovespa, commodity prices, oil, and gold. Emerging markets, particularly in Brazil, India, and South Africa, faced mixed performances in August. Brazil's Bovespa index was up 1.8%, driven by strong commodity prices, while India's Sensex closed with a 0.5% gain, despite inflation concerns. Oil prices saw a rally throughout the month, rising by 10% as global demand increased. This benefited oil-exporting nations, while putting pressure on importing countries. Gold prices remained relatively flat, ending August at $1,920 per ounce, as investors balanced inflation fears with rising interest rates globally. Visual interest rates, inflation charts, geopolitical tensions, and central bank actions. Several key factors drove the market in August 2024. Interest rates. Central banks in the US, Europe, and other regions remained committed to battling inflation through rate hikes, which weighed on growth stocks and investor sentiment. Inflation. Although inflation appeared to be cooling in some regions, fears of it creeping back remained, leading to market uncertainty. Geopolitical tensions. Ongoing tensions in Eastern Europe and trade disputes between the US and China added to market volatility. Market forecast charts. Economic outlook data. As we move into September, market analysts remain cautious. Inflationary pressures, combined with geopolitical risks, will likely keep volatility high in the coming months. However, there are opportunities, particularly in energy stocks and emerging markets, for investors looking for growth. We'll continue to monitor the markets and keep you updated on the latest developments. If you found this video helpful, don't forget to like, subscribe, and hit the bell icon for more content.